Hey everybody, welcome to Inspire to Invest. I've got Arlett Tygesen joining with me to speak for Wealth Wednesdays, which is hosted by Inspire to Invest. She has a 17 years experience in capital markets, primarily focusing on private equity asset class as both an institutional investor on behalf of Canadian Public Pension Fund and as a capital raiser for a major US bank asset management group. It's like a little bit of a tongue twister there, so bear with me. The past 5 years, Arlette has actually devoted herself to building an investment portfolio in the CMF space, so commercial multifamily, in the United States, specifically in Southeast in Texas. And she's got a 52 unit currently under contract, and I know she's continuing to grow from there. So she'll shed some detail on some of the exciting projects that she's got going on. The team has combined 75 years of real estate investing experience, and they currently have more than $140 million in assets under management with more than 2,000 doors. We're going to be going through some questions in the first half. And as I said to Angelo, if anyone has any questions, Charles, thanks for joining us as well. If anything jumps out to you, feel free to, not let the moment pass and jump in with any of your questions. And then, of course, at the end, we'll open it up for a typical Q&A. I've got just a really short disclaimer here that I'll read as well, just to make sure I'm compliant. The views represented in this webinar are not for general information only. They do not constitute investment or other professional advice or an offering of securities. The host and guest featured make no representations as to the performance of any particular investment, and should you decide to make an investment, you're responsible for conducting your own review and analysis. It's recommended that you obtain independent legal, accounting, and tax advice from licensed professionals before making any investment. So thanks again for joining us for Wealth Wednesday. How are you today, Arlette?
I'm great. Thank you. How are you? Thank you for inviting me.
Thanks. I feel like I've gotten to know you a little bit better in the last little while, but we essentially met in an event out by the airport, I guess, around this time last year, and we've connected a few times since. And I really admire all the things that you're doing and also trying to do things the right way, because as we know, there's been, some different uncertainty and distress in the market. So I really thought I wanted to create Wealth Wednesday so we could be interactive, educate people on different options and opportunities available, and really how to create abundance, prosperity, and wealth in their life and do it right from the very beginning.
Mhm. Well, I think that I applaud you. This is a really great forum and important conversations. I did want to update you on something though. That 52 unit, that's in ancient history now. We have a 120 unit under contract.
Oh, boom.
Uh, yeah, a portfolio transaction we're working on right now, and we just launched it about a week ago on the capital raising side, and
Awesome.
it's really exciting. It's a great project. We're excited about that.
Yeah, and that's the thing, everything moves so quickly, right? So maybe you can shed a little bit light, since Angelo and Charles probably haven't connected with you in the past. Maybe you can shed some light on, where you started with building this aspect of your career and what kind of things you have going on.
Sure. Well, I know Charles, but I haven't met Angelo and a few other folks. How are you, Charles? Good to see you. Um,
Yeah.
I started my real estate journey almost 6 years ago now. I'd worked professionally in private equity, as you mentioned, for many years. I worked in a few different aspects of it too, on the limited partner side. As a fiduciary, I worked capital raising side for a big bank in New York, raised tons and hundreds of millions of dollars. They're just zeros at that point.
You
You
don't
don't
think about
realize,
capital raising for a bank, right? So maybe, I mean,
and
that could be pretty common for anyone in private equity, but can you talk about that? Like, I mean, I didn't know banks even did something like that.
well, I was on the asset management side, and we had in the whole ecosystem, we were acting as an intermediary for general partners who were trying to access limited partners. So we were the capital raising unit
Right.
of the bank for external sort of third party general partners.
Interesting.
Um,
Great.
and so they would come to us, and it was like a cattle call. GPs would interview a whole bunch of us, the intermediaries, the capital
Yeah.
raisers, across Wall Street, Bay Street, and you really had to position yourself as a world-class expert in capital raising,
Yeah.
understanding what the ethos was for limited partners. And we're talking large pension funds all the way down to the smallest family office. So, depending on the strategy of the general partner, you had to know the universe of limited partner investors, what the appetite was, all the legal and fiduciary requirements. It was a very high bar, very professionally wrapped up. great presentations
Yeah.
and road shows. We were
Yeah.
constantly on the road, bringing these GPs to this is what I miss about that aspect of it, because it was kind of just like call your Rolodex, set up the meetings. People
Yeah.
wanted to meet these GPs.
It's not
These are
even a question of if, it's just when.
it's like, how
Yeah.
could I fit you a device schedule? And now on this side of things that I've been doing now for the past 5 or 6 years, and everyone on the call can agree with this if you've ever been in capital raising, is who are those people I need to meet? Like, how do I meet those? Because this is more of the retail side of the
Yeah.
industry. It's a very uncollected universe, right? So
Yeah.
you're meeting people here and here and here. It's very random until you're established and you have a big Rolodex or a big database. But most people stay at the beginner stage of capital raising for a lot longer than they
I
expected
can see
because
that.
it's a lot more challenging. There's no
Yeah.
I keep asking everywhere I go, anyone who's an expert in capital raising, I'm asking them, like, what are your best practices? Where do you find those pockets of passive investors? And
Yeah.
I put together my little kind of cheat sheet of how and who, and I work with my VAs, and we put, sales navigator programs in place, and we reach out to components, and because I raise a lot of capital in the States, so
Yeah.
you reach out to the RIAs, and and then you have to create. This is the other side of it, which most people would understand if you've been in this industry, is you're actually creating the solution for people. You're telling them why they need to invest in this. You're solving a problem for them. You're telling them that,
Yeah.
okay, if you're interested in generational wealth, or you need to diversify again, away from 100% of your portfolio in the stock market, this is
Yeah.
a non-correlated investment. You're teaching them, and you have to understand who you're talking to for what they want to hear. So if it's
Yeah.
an RA, someone with a retirement fund, you need to say, like, okay, so in the US, you can open up something called a self-directed RIA,
Yeah.
and you need to go through an intermediary and
Yeah.
put, there's a
But that's the
solution.
thing. That's, I think, the question. It goes to who you're speaking with, right? Like I met
Yeah,
someone that has a
yeah,
private equity firm, and
yeah,
collectively, I think there's maybe 20 primary investors that have like $500 million. Like, if he has to raise $5 million, he's like, it takes me a couple of hours. So those are very different
yeah, yeah,
connections and people to talk to than the person that might only have like $50,000 or $100,000 to invest with. And it obviously takes a lot longer depending on those circumstances. But to your point about the questions, one of my mentors had written a book called Suggestology, and it talked about whoever's asking the questions is a person that controls the direction of the conversation. Because
mhm,
obviously you can tailor everything you're saying around the answers that you get back, right? So I think that's such an important part of building that rapport and, building those relationships early on, because you can't really offer the right things to someone if you don't know where they're coming from, right?
yeah, yeah. And the thing I would add to that too, Serena, is you need to be as genuine and authentic as you possibly can. Like, you're genuinely there to help someone. You're not there to oversell. But I don't know about you guys, but I can't stand being overpitched on something, or this is kind of the industry for that. And the second I hear that, I turn off of that.
Yeah.
I think I generally come across as a genuine person, and people resonate with that. They want to hear the authentic story, right? I would just tell everyone, be as authentic as you possibly can.
Now, in terms of the actual question, so we're talking about obviously real estate and diversifying, using real estate as a tool to build wealth. So, what kind of advice do you have for someone that is just starting out? As an LP, maybe you can explain a little bit about the dynamic of that relationship with a GP LP, or someone that wants to, take the bull by the horns and become a GP. Because
Mhm.
obviously, starting out in either capacity can be a little bit overwhelming.
Yeah, yeah. Well, I look at real estate like it's a Swiss Army knife for wealth building. It gives you cash flow and appreciation and tax benefits and leverage all in one package.
Yeah,
Unlike other investments in the stock market or the bond market, it's tangible. You can go touch it. You can literally drive by it, see it, touch it, improve it, and see it working for you.
yeah,
Um, I didn't create this, but someone said it once, and I love it. It's, don't wait to buy real estate. Buy real estate and wait. If
yeah.
someone could ever tell
I
me
think it's Warren Buffett.
is that Warren, is it Warren Buffett? Is
I
it?
think it might be, yeah.
Oh, it's a good one. And I think the one regret I have is not getting into this sooner. I had restrictions around what I could invest when I was working on the LP side, and capital raising on the GP side. You always have these restrictions of what you can invest in, what you can't participate in.
Yeah,
So I just kind of took a back seat for way too long. I should have been more proactively finding opportunities.
yeah,
But, I came to it a little bit later in life. And I regret not having started sooner. So anything I would implore people, just start small, maybe do a house hack, maybe put $50 a month away to into a REIT or something, or buy a small property. You don't have to know everything. It was just
Yeah.
take that first step. Action creates momentum, and momentum builds wealth.
Now, in terms of identifying the high value real estate opportunities, obviously you are very focused on the southeast part of the United States. Can you talk a little bit about why you feel so strongly about that, and also the value really of commercial real estate? So for people that don't know, like, how do you go and buy an apartment building? Like, just what some of those benefits are behind it being classified as commercial.
Yeah, so we love the U.S. Southeast. They're just Texas and predominantly, they're just in business to be in business. They offer tax incentives for folks getting into business there. There's a mass migration of people moving to Texas year after year. I think 6 of the last 8 years. I love this statistic. U-Haul, the truck rental
Mhm.
company,
Yeah.
they have their growth index, and they've been tracking, I think, for probably 20 years. And 6 out of the last 8 years, their one-way truck rental top state was Texas.
But why?
In
Like,
there,
is
they're
there
not
like
moving
Amazon
back.
building up facilities everywhere? Like, or
Amazon
like
has
tech businesses?
there's so many head offices moving there, and they're
Okay.
leaving California, they're leaving New York. The governments are working with tax incentives, zero corporate tax rate there. There's just lots of incentives for business owners to be there
Yeah.
that you can benefit from. And everyone's looking, the holy grail is how do I pay less taxes? So if a state is like rolling out the red carpet for you to go invest there,
Yeah.
it makes a lot of sense. So, lots of jobs, people follow jobs. It's a tremendous growth area. The weather is great. For those of us in the, Canadian
You're
Arctic
like
polar
here.
vortex, you know,
Yeah.
I'm more and more interested in moving to a sunny state because
Yeah.
I like I'm getting too old
And
for
what are
this.
the landlord laws like there?
It's interesting. It's much friendlier than Ontario. So there is a time frame. So the beauty of it is you can get someone out, a deadbeat tenant, if you will, within 30 days. So the sheriff will knock on your door. You have 3 days to respond, and by day 30, you're out. So
Wow.
it's pretty quick. It's nothing like the torture
Yeah,
you have to
that's
deal
really
with
quick.
here in Ontario, where you can go to the
Maybe
tribunal.
2 years.
It takes 3 years, and no, nothing like that. They're in business at every step of the way, Serena. The laws are created to make sure that it runs efficiently and it serves the business owner. It's not trying to mess with the consumer or the tenant or anything. Fair is fair. Like they
Yeah.
are, especially in Texas, it's fair is fair.
Yeah. Yeah. You got bills to pay too, right? Now, in the commercial side, can you talk a little bit about the acquisition of a commercial property and why that's treated different when it comes to financing as like the GP?
Yeah, so it just opens up, commercial multifamily is anything over 5 or 6 units in states. In Canada, it's 5 units. In the US, it's 6 units, I think. I'm not sure. I've never played in that size. And it really just opens, it's the banks, really. You get better terms, you have more opportunity, more types of financing available to you. We tend to find our deals off market. So there's always banking relationships that come along with that. You have to forge those early on in order to get the best terms, of course. But, we work with the same bankers over and over again. They're just tremendous. They just they understand everyone wants to make money on this, and they want to, they're motivated to get your business as well. So, but yeah, when you're on the commercial side, you're just accessing a whole level of banking. For
Yeah.
instance, on this particular deal, we're going to be seeking HUD financing, which is similar in Canada to the CMHC financing.
Okay.
In the US, it's called Freddie Mac, Fannie Mae, and then there's the HUD financing. So, tremendous terms.
So is that something like a 95/5, the way that things kind of were through MLI Select?
It's similar. It's more like 90. Oh my gosh, my brain's. You have to have 90% occupancy for 90 days in order to qualify for HUD financing, if I
Okay.
have that correct. So it's similar. It's
Okay.
similar. Is that what you're getting at? I've
Yeah,
never.
yeah, I was just curious to see like what the terms are like. And for anyone that doesn't know, for commercial financing, it's the net operating income of the property that's going to qualify. It's not your own personal income. So that's
Oh,
really one of the big strategies, obviously, with commercial multifamily. So if you have a business, and as we know, like a lot of business owners don't put a high income on paper necessarily because you want to offset your expenses, which is great in some respects until you have to qualify for anything. And they're like, oh, you don't make anything.
Yeah,
So if you're
right.
buying a commercial multifamily property, so if it's over 5 doors, then it's essentially that operating income of the business. So it's treated very, very differently from a financing perspective.
Yeah, absolutely.
When it comes to things like mindset and abundance, can you talk about why this is so important, especially for someone that wants to go buy a 100 unit apartment building or kind of go down that path? Because obviously it's something that the average person would consider like just completely daunting, right? So can you talk about how
Right.
it's impacted you and this trajectory that you've been on?
Well, it's funny. I never looked at it as daunting. It was a way to fast track me to my ultimate goal. I have a goal of having 10,000 doors in 10 years. And, I've always thought big that way because I came from an industry that all we did was big deals.
Yeah,
So it didn't occur to me that it was just such an outsized, some could say
I
outlandish
can do this.
goal. But it's all very doable. And mindset, like there's enough opportunity, success, money to go around. Like it's not about competition for me, it's about collaboration. So for me, the trajectory to get to where I am today was find the right team, find the guys I trust, the women, the people I trusted to work with, who are my great service providers. I want to develop and cultivate great relationships with them. So
Yeah,
there's a trust factor, there's a knowledge factor. I wanted to make sure I did have a little bit of analysis paralysis in the beginning of my career in setting up my own firm in the sense that I spent a lot of time really getting smart about the market, number one, but more importantly, interviewing people who didn't know I was interviewing them. Like, could they be a future partner? Could they be a future partner? I knew I needed a team. I can't do this all myself. When you're
yeah,
thinking of scaling at this size, you need someone who's on the origination side, an asset manager, maybe construction side, capital raising. It's a bigger team you need.
yeah,
Um, so in my mind, I didn't have that hurdle, but I think it's always because I've always believed that there's enough opportunity to go around.
yeah,
And when you are, your mindset's like that, the world does open up. Like collaborations come and happen. I find the competition puts up walls. Of course it does. But it's limiting. And, I find the collaboration, you learn from the failures, the challenges, they're growth opportunities. It's not an either or thing for me. It's a both. And it's a bit of a dream big thing, but I believe it. So, and that's one of the most important things. Like everyone has to identify their why as to why they want to do this. Why do you need to
yeah,
be in this business? It's a challenging business. It's a difficult business. If you don't identify your why and you don't understand what's motivating you, you're going to derail yourself over and over again because the why is what motivates you through the good times, through the bad times. And it's not just the why, like so that's your belief system. Like, why do I want to do it? Why do I believe in this? Why do I want to do this so badly?
yeah,
People get stuck in that phase. I want to do it. I want to improve my life. I want to create generational wealth. I want. Until you take action, nothing is ever gonna, like, you're just not gonna believe nothing's gonna transpire. So
yeah.
but then when you take action, it opens up another layer, which is the self-worth layer and the worthiness, because there'll be setbacks. You'll be like, well, I dream big. They said to dream big. And I stuck my neck out there and I've had a setback. And then when you start in that phase, then you start challenging your worthiness. Like, am I the right person? Am I smart enough for this?
You're like defining my 2024.
Oh, right. But it's your
Yeah,
like it's defining your self-worth, right? And then so then you have to go back. I look at it like a wheel. It's like
yeah,
four, I don't know, four cogs in the wheel. It's a constant cycle. So you start with your why, you identify your belief, you take action, and then you have to remind yourself constantly about your worthiness for it. Why am I here? Then when you get to the worthiness, there'll be a setback and you go, oh, now the self-doubt is creeping in. So you got to get yourself back up to the wheel has to turn. You got to remind yourself what the why is. Put yourself in the rooms with the people that help you with your belief system or support you or, make sure you're aware of who you're surrounding yourself with because not everyone is praying for your success, right? You need to understand who your genuine um, support system is. So I spent a lot of time looking at that. I spent a lot of time kind of assessing people. I think I have a pretty good gut instinct for people,
Yeah.
whether they're genuine or not. And first and foremost, what I do is I don't look at it like, what can you do for me? I always start with, and so do you, Serena. This is how we met and how we bonded. What can I do to help you first? What's the value I can offer to you? Because we all have a great skill set. We all know
Yeah.
something. We're all imparting wisdom to something or expertise or something. And then with no expectation of return, something always comes back to you, right? So that's to me is the most important thing.
Now, since you had this illustrious career more on the private equity side, what was that pivotal moment where you decided that you wanted to make a shift?
Oh, you know, that's a really good question. I think I've had lots of pivotal moments. I've always been attracted to the entrepreneurial side of things. Even though I worked in corporate for a million years, my whole family is made up of entrepreneurs, mostly on the artistic side. Artists, art dealers, gallery owners, but they were all their own
You're the
entrepreneurs.
black sheep.
Pardon?
You're the black sheep.
Yeah, yeah, right. But here's the interesting thing. My mom was the CFO of the business, the family business. When we were 8 years old, I keep saying we because I have a twin sister. She marched us down to the Bank of Nova Scotia and had us open up our very own bank account. We had to learn. She taught us how to balance a checkbook, and we had to put our $2 of allowance in every week, and we had to, we were allowed to take out 50 cents for candy, whatever. I did not for 1 second think that that was an important lesson at the time. Like, why do I need to know this? I hate math. I don't want to do this. And it has served me unbelievably well over life because what it did was it gave me financial acumen, awareness, and confidence. And those are the foundation things you need to be in any business, but as an entrepreneur, and you have to have a thick skin. So, you ride this wave of good times and bad times in the entrepreneurial world. And if you didn't like it, you're not cut out for it. So
No,
I,
that's huge.
right.
Now, I guess you obviously talked about things like setbacks and self-worth. When it comes to things like limiting beliefs, they are some of the most common limiting beliefs that people are experiencing. And, what strategies do you think they should employ to overcome them?
Yeah, no, that's a really, really big one. And that sort of goes back to that self-worth, self-doubt thing we were talking about a minute ago. I think the three big things I hear is like, I don't have enough money, I don't have enough time, and I'm not smart enough. And the interesting thing about this business, yes, you need to get yourself educated, but you don't even need a college degree to do this business. Like you need to be smart. You could be self-taught. You need to surround yourself with smart people and offer value first. Smart people aren't just going to say, here, just have it for free.
Yeah,
But you need to have a plan, right? So you don't have to be a genius. You just have to have a plan.
yeah,
You can start small, but you have to be consistent every single day. Have a plan, have a structure.
yeah.
Yeah, have your three or four to-dos. My to-dos, everyone's to-dos are usually like 25 on a list, but what are your top three you got to accomplish every day and just take action?
Yeah. Now, in terms of just starting out, like for someone that's like, okay, it's like a chicken and egg kind of thing, right? Like, are you structuring, like, are you talking to your securities lawyer first? Are you looking for apartments first? Are you raising capital first? Like, can you talk about how you found like an apartment of that size for sale? Like, was it just regular on market? Was it off market? Like, can you talk about just kind of the best way to assemble those pieces together in a way that makes the most efficiency and the most sense?
Well, I'd say number one is having clarity of your purpose. So I knew I wanted to set up a GPLP fund. I knew I wanted to do that. Most people don't even know that that exists, so I wouldn't recommend starting there. It
Yeah.
is more sophisticated,
But
higher
it's because
level.
it's a larger amount, right? So it's not like you're just partnering with one or two people on a JV. Like if you're buying an apartment, you probably need multiple LPs, right?
Yeah, yeah, absolutely. So on this particular deal,
Mhm.
we're raising 5 million in equity, and if you know how many LPs I need if I'm getting $100,000 at a time, right? So,
Yeah, yeah,
um, so I spent, as I said earlier, the better part of the last few years just getting really smart about these structures, who my lawyers had to be, who my attorneys had to be, and because it's in the US, I had to do cross-border everything. We had to
yeah,
have our Canadian service guys, we had to have our US service guys. It was really just having a clarity of having that all mapped out Now, unfortunately, the way this market works is you'll find a deal before you have people or available cash, or you'll have available cash and no deal. So nothing ever works out. It's not a straight line, absolutely
Yeah.
not a straight line. So, in between deals, I'm sitting there cultivating relationships. That's what you do. Like you just reach out to people,
Yeah.
if I have a deal or are you interested in Texas? Like here's why you might like Texas. Just
Yeah.
putting that information out there. And then when you're actively capital raising, it's full court press. It's heading out to all those conferences and going to meetups and sitting on podcasts and just getting the word about what you're doing.
Yeah.
And the thing you asked me about is how we sourced our deal with this particular most for the most part, our deals are off market. Because sometimes when they're market, obviously they've been shopped around a lot. And you're not, especially as a Canadian, I worry that I'm never seeing the deal at the start. It's already been passed over by 10 Americans and then,
Yeah.
sending me the crap leftovers. We really spent a lot of time cultivating, and our deal origination guy, Evan, is fantastic. He's cultivated deep, deep relationships. In the past 2 years alone, he underwrote 100 deals
Wow.
before we settled on, well, three, two we didn't proceed with, and this is the third one this
Now,
year.
do you use any particular platforms to underwrite the deals, or do you have your own spreadsheet where you're plugging things in?
Evan has a bit of a proprietary platform he's built over the years. It's basically an Excel spreadsheet on steroids,
Okay.
and it's fantastic. There's lots of those around. I know I have access to them in different masterminds that I belong to, but yeah, just having a really good um, step-by-step list of what you need to do within a deal framework. So we have that sort of checklist. We have to check the box on all aspects of it, from the
Yeah.
origination side to asset management, to the distributions for limited partners, that whole thing. Our actual deal portal and our investor portal, it's called Invest Next. It's a fantastic portal. It does everything. It takes you right through validation of your client, accreditation, confirmation, and then it takes them in through the deal. It does all the reporting, all the taxes on the back end.
Wow.
Um, doesn't do the taxes for you. It
Yeah.
issues.
Yeah.
Yeah, it's fantastic. So you do need a few systems. Systems are very important. I wouldn't recommend overdoing it because I geek out on all these things. I can go down rabbit holes. And this is great. This is
You got
great.
to just be efficient, right? Like one aspect is kind of like raising the money that you need to close on the project, but then you also have to think about all these contingencies and things that could come up and stuff like that. So I guess when you're looking at evaluating if a deal is going to work or not, like, are there any certain like significant check marks that you think people should have on their radar?
Yeah, you absolutely. So for us on the multifamily side of things, when you're doing your due diligence, you need to make sure you vet the project in the community to the extent that you can. Like there are always people that know the backstory, or they know the seller, or they know the developer, or they know the property manager.
Yeah.
I would like that kind of vetting. That's always important. There's never going to be a perfect deal. They're all going to have a little bit of hair on them. Um, and our number one action plan is if you don't make equity on the buy, it's not a deal for us. Like there has to be some equity that you've already accumulated, because worst case scenario, if you have to sell it on day three, you've already got that equity built in there. So it's definitely vetting it in the community. It's definitely running the numbers, getting the T12 and all the rent rules, and really digging into those numbers, because people like to massage numbers, and we've walked away from deals at the 11th hour because suddenly a second set of books shows up, or oh, this they weren't tracking this expense really correctly. And sometimes when you're buying from like mom and pop property managers, they'll
Word document.
yeah, so there'll be a 1 month where it's like massive expenses, and then there'll be nothing. I'm like, well, no, there's expenses every month.
Wow.
So, you got to normalize that and just really dig in. So it's really, an important skill is being able to dig into the numbers and watch for any red flags. And if there's too many red flags, or any, really, you got to
Yeah.
walk away. You can't fall in love with the deal. You got to walk away.
Yeah, no, that makes perfect sense. Now, speaking of things like that, have you ever made a big mistake when it's come to an acquisition that just really didn't work out the way you anticipated?
Oh, it's been perfect. I never make mistakes. No, of course, of course. There's always things, like for instance that one deal I just said where we had to walk away at the 11th hour. You don't want to do that because, you've signed some letters of intent, and you've gone down the road a really long way. You've already started talking to potential investors. You're talking to your bankers. I mean, everyone's thinking this deal is happening, and if you don't handle it the right way, it can make you look bad. You're going to embarrass your banker. Like, there's lots of you got to be really careful about that. But certain things are just non-negotiable. Like when we saw that second set of books, that was it. Like, and then it's how do you message that to your limited partner investors so they don't lose faith in you. For me, it was messaging that, it just speaks to our level of due diligence that we undertake. And look what we uncovered. Thank God we uncovered it now before we wrote a big check.
Yeah, and I think that's really where the transparency and the communication comes in, right? Like, I think there's nothing worse, especially on a passive investor side, where you're trying to get answers and they're not responsive. There's been some instances on deals I've invested in where it's like I've sent 3, 4 emails and I only finally get a response when I message them on Facebook, like 2 weeks later. It's like,
Right,
I've
right.
obviously trusted my money with you to invest. Like, I shouldn't be chasing you. You should be setting up a certain frequency for updates. You should, especially if there's something hitting the rails, like there should be some sort of consistency in terms of how you're communicating and
Yeah,
just when you'll send updates, even if you don't have something, acknowledge that you've gotten the email.
yeah,
And I think some of that comes down to those business basics. And, like you said, you don't need a specific degree to go down this path. There's a lot of people that I think don't have that business acumen or professionalism that I think should really come along with something like this. It's not just like buying a building. No, it's an actual business. Like, you got to treat it like
that's
a
right.
business, like a 360-degree approach. So I think for the people that will have staying power, that will have repeat investors and stuff like that, they will be the ones that, treat their investors as a VIP and, handle them that way across the board.
Yeah, that's one of the things we've implemented with InvestNext. We just adopted this technology, InvestNext.
Yeah.
We've put in place the newsletters and the regular communication and the outreach to the investors as we go along the capital raise too, right?
Yeah.
You got to update them where we're on that as well. So transparency is important. You don't want to overdo it because people don't want to hear from you all day, every day.
Yeah, but even once a month or quarterly, like whatever that frequency is, establish it from the beginning and
Yeah.
make sure that you're sticking to it.
And the biggest value you'll ever get is when you approach a challenge head on. You reach out to your investors and you say, listen, this is what's happening and this is what we're doing.
Yeah.
There's a right time and place for that, but informing your investors will go a long way to cementing that trust level.
Yeah,
I,
they shouldn't hear about it from someone else.
shouldn't hear
That's
about it
the
from
worst
someone else.
thing that can happen.
I'm a limited partner investor on thousands of deals. Like that was earlier on when you're talking about my bio. A lot of that is from my limited partner passive investing
Yeah.
path. And I can tell you off the top of my head, I hear from one GP regularly. One.
One.
I've never heard once why a distribution is delayed. I've never had distributions from some that are supposed to be distributing, and it's like pulling teeth trying to get an answer. So
Wow.
I think that's a terrible, terrible practice.
On
And
this building, right?
pardon?
I said, it's like you wonder, or you do still own this building, right? Like,
Right, right. Yeah, am I seeing a headline and in the news? Like, should I be like, what's going on? So I shouldn't have to dig for that information. I look at it as a privilege. You are trusting us with your money. We are true partners here. I owe you information. I owe you performance. I owe you. We have to do what we say we're going to do. There's going to be market fluctuations, there's going to be issues, but A, you got to address it head on, and
yeah.
B, you just got to be transparent.
Yeah, no, agreed. Now, just in closing, I've got two other questions and we'll open it up for everybody else. But in terms of things like legacy and giving back, obviously you talked about your why, and for you, your goal was 10,000 units in 10 years.
Mhm.
I mean, that's a big goal. Like, what would you say is your main driving force behind something that significant?
That's a good question. And for me, the sole driving factor for me is to leave a legacy for my kids, not a legacy of money, a legacy of mindset. I want them to realize that I'm not handing this all over them just so that they have a cushy life going on in the future, hopefully. Um, I'm putting plans in place to show them, first of all, how they can do it as well.
Yeah,
But secondly, what that mindset does to them. So I'm teaching my kids about money. I'm teaching them how to be confident. Start small, be confident. There's lots of little ways to get started. Create systems, but for the most part, be intentional. Like this matters. I don't remember when I was in my 20s thinking about my retirement. It was the last thing on my mind. I wish I had focused more about it in my 20s, and I'm trying to impart that to my kids.
Yeah.
That it all matters, but it all matters first and foremost from your mindset and how you approach it.
Are
So
they
that,
receptive?
yeah, more and more. Actually, more the people who are more receptive are my kids' college roommates. Both my kids go to school in the States, and they see like the conversations I have with my daughter, or they see the budget that I literally printed out a piece of paper and stuck it on her bulletin board. This is what your monthly budget is. And none of her roommates even knew what that was. So I spent a lot of time teaching young women, young kids, my son's kids, friends too. Boys are less receptive. This is what this means. And
Yeah,
by
it's
the
so
way,
empowering though. So I can see that, right? Like
very,
I'd say
very,
my family is the same way. Like they didn't get involved in any kind of like university applications, budget, nothing. So it was, I
mhm.
think you've got something that you've got accessible to you. Like why not take advantage of that, right?
And I really care passionately about teaching people who don't have access to this knowledge. I was fortunate enough to grow up in a creative but financial family. I didn't realize what a gift that was.
Yeah.
But the people don't get exposed to this. So if I can share what I have, I really, really believe in helping others and helping especially younger kids. They got to figure this out, right? The
Yeah.
world is just a little bit too scary these days. There's not a lot of direction, and
Yeah, and
you
you've
know,
got to be the ambassador for your own life, right? Which is
yeah.
kind of the perfect segue in my last question. If you could go back and give your younger self a piece of advice when it comes to money, mindset, and investing, what would it be?
Stop going to Starbucks, stop buying lattes.
I have a
You
latte factor.
a latte factor, right? It's just, take that money, put it aside, be very diligent, pay yourself, tell yourself what a reward that is.
Yeah.
That's not a, you're not restricting yourself from anything. You're paying yourself in the future.
Yeah.
Um, you know, I, had I started earlier, I'd be podcasting with you from a private island somewhere, right? Like you started early. You gotta be kind to yourself. You gotta be future thinking, and that's something that not a lot of people think about. It's they don't think about their future till
Too
it's
much in the here and now. Yeah, and you
yeah,
got to have that balance, right? Like you've got to enjoy the journey and enjoy the process, but I think you've got to, like you said, educate yourself, take action, and work towards creating the life that you really want to live.
correct. Legacies aren't accidental, right? Their legacies are built on intentionality.
Yeah. Yeah, when I used to have my events company, we planned some events for St. Joseph's Health Center, and
Mhm.
one of them was for Peter Gilligan, who's the owner of Mattamy Homes.
Yeah, yeah,
You know you've got a legacy when you're just giving away money in the increments of like 10 million at a time. Like I'll put 50 million for sick kids, so now it's the Gilligan wing and 10
yeah,
million here and 10 million there. Like that's
yeah.
a joke, right? So
That's a huge, huge aspirational note, and he's a lovely person. He just
yeah, no, he is. Yeah, I had the chance to meet him through that event, but definitely very inspiring just where he came from and the things that he's doing when it comes to philanthropy and what he's passionate about. So,
yeah,
in
yeah.
terms of opening up the floor to other questions, I know we just have a few intimate guests with us. So, if anyone has any questions for Arlette, the stage is yours. Yeah, go ahead, Angelo.
All right, so you're definitely operating on a grand scale here, but for smaller people looking to get in the game and invest in the United States, um, what sort of tools or what do they need to know in order to set themselves up to buy that property in the States as a Canadian?
Yeah. So are you talking on the legal side or access to deal side or kind of all of it?
I would say on a legal side.
So there's some great lawyers you can reach out to that can give some great advice in terms of what your company structure should be like. So for us, we have a Canadian layer, a GPLP, and then our LP invests in, and I can share this with Serena and send it to you guys if you want. It's a standard structure you'd put in place. Our Canadian LP then invests in the US GP. So it's a flow through, right? So and we have our LLC set up down there. We have our operating company. And then on the back end, when we go to issue distributions, we take U.S. withholding tax. We issue the tax credit. It goes through the IRS up to the CRA. So our investors will get, their foreign tax holding credit, I think it's called. So there's definitely structures for that. And Angela, there's tons of lawyers you can talk to about this, but that's the standard kind of setup, and I'm happy to share it with Serena and she can distribute it later.
And there's a lot of things to consider. Like my first rental property was actually in the United States. and I bought it when the dollar was at par. So it was kind of a perfect opportunity. Like looking back, I'm like, I could have even just used my whole line of credit, put that in US dollars, and done no work because we know that it's not going to stay there, right? But essentially, I bought it in my personal name, which I wouldn't necessarily recommend, but I had to get something called an ITIN number. And it's kind of like your social security number being a foreign national. So I was able to file my US taxes, then you file your Canadian taxes. So everything's kind of cross-border.
Yeah.
The banking was a little complicated because at the time, and this is dating me, it was 2013. So they didn't have email money transfers. So I had to find a way that I could deposit the money I was receiving from snowbirds essentially as US funds. So I had like my US based US account, a
Yeah.
Canadian based US account. So it was kind of like this north to south transfer, and there was all these complexities. And back then it was actually very difficult to qualify to buy an American property as a Canadian because you couldn't really qualify in either country. So that's changed dramatically since then. And I mean, the main thing now is that you want to keep in mind that it can be a little bit more litigious in the States. So having it in an LLC is probably more beneficial. And there's certain things that you would structure from the standpoint of taxes, but then also legally. So you want to make sure that you're working very closely in tandem with your accountant as well as with your lawyer, just to make sure that all of those things are making sense when it comes to liability and exposure, as well as maximizing your tax efficiency.
And I would also add to that, Serena, make sure you have the proper insurance policies as well. The LLC can protect you, but you want to make sure, because the states is so litigious, you need to absolutely make sure you're wrapped up that way, because they'll just go after you personally, and you need to
Yeah.
make sure that that doesn't happen. So
And also, if you think about even the fact that the dollar, no, our dollar's tanked, so it's not great in that respect. But
Mhm.
there's also a lot of markets in the United States that it's still so much cheaper, even if you factor in the exchange. Like, buying an apartment building is, maybe not the first step that you want to take, even though I'd say the majority of investors I talk to say that they wish they went bigger sooner. So keep
Yes.
that in mind because it's the
Yeah.
same work to buy a building like that it is to buy something small. But if it's something where you could possibly start with something like a midterm rental. I know people that have done really well buying single family homes in the Midwest, and they're buying them for like 100 and 150,000 US. They're
Yeah.
renting them out for midterm rentals. So to traveling nurses, doctors, construction workers for
Yeah.
still like $2,500 a month. So they're still cash flowing like very, very well. But you could start out with like 20, $30,000 of your own money and do something like that. So there
Mhm.
are different strategies in place, just like in Canada, like, if you look at the Maritimes or Alberta, like there's different places that are more affordable and, you just want to look at, what you've got the time to dedicate towards and at least taking a step is taking a step, right? So you just want to be able to start somewhere and that will put you on the path to growing that wealth and maybe the next time you can buy a multifamily.
Yeah, and I would say too, Angela, to Serena's point there was on the smaller scale, the non-commercial scale, you do have to put up, you know, you are the person the bank's going to talk to, and no bank's going to talk to you on a small scale there. So that forces you to go to the higher lenders, the higher rate lenders. So you just have to make sure that the FX exchange, it's all on the buy. Whatever, if the numbers work on the buy, including the FX, including all your expenses, including the higher interest rates you're going to have to pay on your lending, one, if those pencil out, then go ahead with the deal. But to Serena's point, the deals are so attractive in the States, unlike in Canada. I looked at Canada when I first started the first um,
Mhm.
5 or 6 years ago. Um, 5 or 6 years ago, I looked at Canada. I couldn't make sense of a lot of the numbers, and then I go to Texas, and I'm buying 120 units for $142,000 a unit. That's unheard of in Canada. For the similar kind of building, I think that'd be closer to 350,000 a unit or something. It's
They're kind of the catch 22. It's like you could be buying somewhere where it's cash flowing, but there's not great long-term equity appreciation. And where there is good equity, you probably aren't cash flowing at all, right? So I think you want to have a bit of a balance when it comes to some of those things. And then the other thing for anyone that hasn't invested in the States is the 1031 tax exchange. So in Canada, anytime you buy and sell a property, you're going to be paying tax. And as we know, capital gains is a lot. It used to be 50%, now it's 66%. Where in the States, there's a strategy in place where you can tax defer as long as you're rolling into another property within a certain period of time, which I think is a year.
No,
then you're not
45 days, you have to identify it within 45 days and
so
you have to pay.
there's a period of time, so don't quote me
Yeah,
100% on that, but at least you can tax defer it so you can continue to scale up and scale up without having that immediate tax implication. So that's probably one of the biggest things when I talk to American investors, and I feel like I have a lot I've talked to through the podcast, but that is like the number one biggest thing that they all are, excited about is the fact that we're not, they're maybe a little bit more business friendly and more
exactly.
tax friendly than we are here.
Yeah, I implemented a 1031 exchange strategy for this fundraise because there's no marketplace to go meet people who need this. So you kind of have to, again, create the solution for the limited partner investor.
Yeah.
And want people, so if they have an existing single family home that's worth $500,000, they can 1031 it into an investment like mine, as long as it's the net proceeds are above the value of, so the house was 500,000 net of marketing or sales costs, whatever.
Yeah.
They have to invest at least 500 or more into my deal, for instance. And so there are administrators, and similar to like an Olympia Trust here in Canada, there's administrators in the States that you have to work through, but
Yeah.
it's minimal. It's like $1,000 or $2,000 to do that. So, and it's a great solution for people who want to, if they're either retiring. A lot of retirees will sell all their properties, and they'll move into
They're
land,
losing
for instance.
so much money.
Pardon? Yeah.
And they're losing, yeah.
Yeah.
That's
Or
not a good way to create that generational wealth, right? So it doesn't mean at the end of it, like I don't know what that looks like when it comes to passing portfolios down. What some of those things look like.
that gets more complicated. You got to put a trust structure in place, or else you'll have all your depreciation recaptured.
Yeah.
It gets messy. So again, it sounds complicated. You just have to have a good lawyer, a good attorney, and a good accountant, and they'll structure it for you. It's not cheap though. I mean, you got to make sure the deal's worth it.
Yeah, for sure.
Yeah.
Charles or Francesco, do you have any questions?
Yes, Arlette, you're fairly active on social media. How's that helping you with your capital raising?
Well, my Instagram, which is Arlett_Tygesen, that's where I'm doing sort of the outreach and the confidence building. And I'm like your big sister or your mom, like the advice you never got from your own mom kind of thing. That's where I'm trying to really cultivate future generations of financially literate, capable people, because I believe firmly everyone can. They just have to get the mindset, I can't do math kind of thing. Change that. That's easy enough to change if you want to do the work. So that's more of a cultivation of, and that started with my daughter, right? She was going away to college and her roommates were like, what is this budget thing? I'm like, oh, I popped it on my Instagram. I just started it last May, Charles, as you
Yeah, I was
know.
gonna say it's amazing the growth that you've had. I'm
Yeah,
just like, oh
but
my
it's
gosh.
it's resonating because it's foundational information. People need a source to go to find out, how do I even start? So it's kind of a blend of finance 101 and real estate 101. I have not tried to cultivate a single investor from that Instagram.
Yeah.
I mean,
But
I
it
make
builds credibility, right? Because obviously people go and look it up and they're like, oh, she must know a thing
yeah,
or two.
and I offer things like, here's a budget, here's how you do a budget, here's a mindset journal, here's some freebies, and here's some other little things you might want to do a deeper course on, or just it's all in the realm of education, because I truly want, and self-serving. I want my kids to do this, and if it's working for my kids, it's going to work for a whole bunch of other kids too.
Yeah.
So, or
Yeah.
people in general, like half my demographic is over the age of 44. So people can start at any time, and it just shows you that people want to learn. So, but Charles, the consistency is the important thing. Posting regularly, posting things of value. And I focus on reels. I'm starting to put a few more posts out there now just to change it up a bit.
Yeah.
Yet, got to continually innovate on that.
Yeah.
Did I answer your question, Charles?
Sure. I mean, that's social media is fairly new to us. I mean, not for the kids, but older people. And at the beginning, it's kind of difficult to participate. You get yourself on a video and you're, oh, sure, I look like. But once you start using it as a tool, I think that's really great.
Yeah, and we all have to get over the cringe factor and my first videos were not like my last video. We all have to go through that learning curve, and give each other a little bit of grace to go, hey, they're putting themselves out there. I support that all day, every day. But I have a social media manager who helps me with video. I don't create that myself. He's got great cameras and great editing tools. And I have a team behind me. I couldn't do that myself. And I resisted for the longest time because like, oh, more money out, more expenses.
Yeah.
But it's the old adage, you got to spend a little to hopefully get a bigger return. So, and I think that's a trajectory I want to go in terms of an education platform like that. So, it's worth it to me. So, and I enjoy it. I enjoy it. So, yeah.
What is the source of your investors? What do you look for investors when you have a deal and now have to look for money? Have a specific place that you like or you know? Or...
Oh, that's the $50 million question, Charles. You just look everywhere. So, in Canada, as you know, we can put together an MFT trust where you can access registered funds. I'm not willing to spend that amount of money unless you're raising $10 million. I wouldn't bother going to the MFT thing. But in the US, with the beauty of the US, you can just direct somebody to open up a self-directed IRA, and they can take their registered funds and invest with you. So accessing RIAs, registered investment advisors in the States, if you're adding to their assets under management, they will love you. So that's a good source of capital. Cultivating 1031 exchanges, going on Facebook, on the Facebook groups for 1031 exchanges. In Canada, it's, you know, I said earlier, I've started a sales navigator strategy where we've really filtered down to meet C-suite, um, dentists, doctors, lawyers, anyone who's going to likely to hit that accreditation milestone that I need for my investors, because we only accept accredited investors. You just have to create that social media around that. So LinkedIn's very different from me because you have to publish articles and knowledge points versus social media, which is way easier to do. But you refine it on Sales Navigator, you get a couple leads that way. And then you just have to show up to the conferences, Charles, and you got to show up, try to get a speaking point or host a workshop or host a meetup. Those have always been my best sources of finding, because it gives you a minute to kind of pitch yourself. Like you start that, I heard somewhere it takes 7 touch points for someone to really trust you. So, getting out to conferences and meetups and things, those are all those touch points you need before someone's really truly going to give you their money. Right. So it's still a face-to-face business, and it's really hard in this Zoom world to have that same kind of impact. But having said that, I sign up for a lot of investor meetups online, and you often get a minute to talk about your deal or what you're working on, and I always get a lead or two from those. So it's remarkable. It's remarkable. It's just busy work. It's a lot of work, so you got to just dedicate the time. Yeah.
Sure. Awesome. Well, if there's no other questions, we'll wrap up. I want to say thanks for everyone joining us today. It was great to have some extra people here. We'll have this recording up on YouTube as well if anyone wants to go back. And I know, Arlett, you mentioned that you'll share some of those resources, so I can share that with everybody that was here as well.
Yeah, absolutely.
Amazing. Thank you very much for your time, guys. It was awesome.
Have a great
Thank you very much as well.
It's a great journey to be on. So good luck.
The views represented on this podcast are for general information only and does not constitute investment or other professional advice or an offering of securities. The host and guests featured on Inspired to Invest make no representations as to the performance of any particular investment. Should you decide to make an investment, you are responsible for conducting your own review and analysis. It is recommended that you obtain independent legal, accounting, and tax advice from licensed professionals.